Today, we'll be exploring how hydrogen is finding real traction, both in India's energy revolution and across evolving U.S. public projects, while facing the hard realities of Wall Street scrutiny and sector economics. Whether you're an investor, engineer, policymaker, or just passionate about energy, today's deep dive offers grounded case studies, sector news, and candid analysis. All this on today's Hydrogen Podcast. Our first segment today covers India's hydrogen giants. India's hydrogen transformation may be the energy story of the decade, with a national green hydrogen mission targeting 5 million metric tons of production per year by 2030 and a budget of just under $2.4 billion. Hydrogen is at the center of government plans for energy independence by 2047 and net zero emissions by 2070. Major players are already moving quickly. NTPC, GAIL, HPCL, BPCL, and Adani Enterprises are not only initiating pilots but developing integrated hydrogen ecosystems connecting power production, mobility, industrial feedstock, and energy storage. NTPC spearheaded the world's highest green hydrogen refueling station at Ladakh, powered by a 1.7 megawatt solar plant and an alkaline electrolyzer, making 80 kilograms of hydrogen daily. Its microgrid pilots at Dadri and Greater Noida show how hydrogen compare with renewables for grid backup, while methanol-from-CO₂ conversion at Vindhyachal demonstrates multi-sector integration. The Big Move, a $21 billion green hydrogen hub at Pudimadaka combining green methanol, ammonia, and electrolyzer manufacturing. Scale and vertical integration are key. The company is betting heavy on onshoring value chains. GAIL commissioned India's first green hydrogen plant at Vijaypur with a 10 megawatt PEM electrolyzer unit producing 4.3 tons per day. Research partnerships like with IIT BHU and BITS Pilani are exploring advanced hydrogen production from natural gas and chemical looping combustion, improving purity and efficiency. By blending hydrogen with natural gas for home use, GAIL is pushing innovation that could spread throughout gas grids nationwide. HPCL built India's first refinery-based green hydrogen unit at Vizag and is scaling up to 16,870 tons per year target by 2028. Its partnership with Mahagenco and global tenders for 5,000 plus tons per year of green hydrogen show its commitment to full-scale industrial integration. HPCL aims to achieve net zero Scope 1 and 2 emissions by 2040, ahead of the national timeline, putting hydrogen as a clean energy cornerstone in its business. BPCL has piloted a 5 megawatt green hydrogen unit at the Bina refinery, with a refueling station nearing commissioning at Kochi. It's integrating green hydrogen into steam methane reforming for decarbonizing refinery operations and exploring biomass-based hydrogen units. BPCL's bid-winning biomass hydrogen projects under India's site subsidy and its joint venture with SimCorp for renewables show a holistic, multi-path approach. Adani Enterprises is shaping up to be a technological leader, debuting a 5 megawatt off-grid green hydrogen demonstration in Mundra and winning a 300 megawatt electrolyzer order for scale-up, with an ambition to couple gigawatt-scale renewables to giga-scale hydrogen. Adani is moving from pilot projects to manufacturing readiness. The company's renewable unit, posting a 108% EBITDA jump, helps finance the hydrogen build-out. So what can we conclude from this? India's hydrogen economy is moving out of the lab and into real industry, but success depends on scale, cost, and persistent execution. Shares of these giants have mostly corrected over the last year. NTPC is down 16.5%, GAIL 24.8%, HPCL 1.4%, BPCL 8.5%, and Adani 22.1%, reflecting market discipline and the challenges of capital allocation. Still, the intent and early results suggest India's hydrogen story is one to watch, with energy security and industrial decarbonization at its core. And so in segment 2, we turn to the U.S., where public investment in hydrogen is accelerating at federal, state, and local levels. Recent headlines highlight a massive update to public transportation in a U.S. region, placing hydrogen-powered transit at the heart of clean, efficient travel, even over complex terrain such as hilly and remote areas. This isn't pilot territory. It's real infrastructure and procurement with policy and budget commitments, showing hydrogen buses and urban trucks are ready for deployment at scale. New York State has awarded over $11 million to 5 clean hydrogen research and development projects in sectors ranging from energy grid support to healthcare resilience, maritime transit, and industrial decarbonization. Projects include GTI Energy's study of underground hydrogen storage for long-term duration backup, National Grid Ventures' 100% hydrogen-fueled linear generator at Northport, Plug Power and Vern's cryo-compressed hydrogen trailer for lower-cost distribution, Stony Brook University's low-pressure hydrogen storage at Northwell Health Hospital, and Switch Maritime's ferry project for zero-emission urban transport. Funding comes from NYSERDA's $6 billion Clean Energy Fund and New York's broader $1.2 billion innovation and research agenda, which has already led to 700 companies and 300 commercial products being supported. California, meanwhile, hosts North America's largest green hydrogen plant, the $1.85 billion Lancaster Clean Energy Center by Element Resources, with 22,000 tons per year of green hydrogen capacity, powered by 650 megawatts of solar and backed by long-duration batteries. It's a model for a sun-powered, grid-independent mega project. The hydrogen is delivered in gaseous or liquid form, distributed on zero-emission fuel cell trucks. Community and environmental benefits are key motivations, not just emissions, but reliability and future-proofing it against climate shocks. Industry is eyeing the Gulf Coast for similar scaled projects, with the NFE green hydrogen plant among the largest for North America. And in segment 3, we turn to Wall Street's caution on Plug Power. Plug Power's journey reveals both the promise and struggle of scaling hydrogen tech in real markets. Despite top-line growth, Q1 net revenue up 11.2% year-over-year to $133.7 million, Plug Power remains plagued by losses. Its Q2 gross margin was deeply negative, with a quarterly gross loss of $73.86 million. Losses per share of 21 cents just misses analyst estimates of 20 cents. Over 52 weeks, Plug Power stock dropped 27%, is down 55% from its high point, and down 29% year-to-date. Wall Street analysts, Morgan Stanley included, caution that the business model remains unproven, with concerns over recurring cash burn, economic viability versus fossil and renewables, and dependence on government subsidies. Plug Power's price-to-sales ratio is a costly 2.75x, stretched versus industry averages. Plug Power's core business, hydrogen fuel cells for forklifts, material handling, and logistics, leans on giants like Amazon, Home Depot, and Walmart. But the loss leader approach to selling fuel below cost erodes margins, requiring a delicate balance between technology adoption and financial resilience. While bullish supporters note the impact of pro-hydrogen federal legislation and a possible rally if sector support is renewed, most analysts currently rate Plug stock as a cautious holder sell, pending real profitability and improved capital discipline. These diverse stories converge on a central truth. Hydrogen is not a magic bullet for every sector, and both India's on-the-ground projects and America's public investments must grapple with economics, local integration, execution risks, and real-world demand. Overinvestment in unproven hydrogen applications can lead to wasted capital, missed opportunities for renewables and electrification, and eventual erosion of public and market trust. The smartest players, be they NTPC or Plug Power, are shifting towards applications where hydrogen truly adds value. As backup for renewables, clean industrial feedstock, zero-emission urban transport, and low-impact energy storage in hard-to-electrify sectors. Projects with clear offtake, regional policy support, and credible cost structures will survive and scale, while hype-driven deployments will naturally recede. For investors, disciplined capital allocation, rigorous financial modeling, and tight project execution are the order of the day. For governments, aligning funding with scalable real-world solutions rather than simply chasing headlines is critical. For the hydrogen industry, this is the inflection point. Performance, not policy promises, will define long-term winners. And so the outlook for hydrogen is both exciting and challenging. India's ambition for energy independence and decarbonization shows that hydrogen can be industrial, localized, and multi-sectoral all at once. The U.S. demonstrates how public investment and innovation can enable infrastructure and technology at scale, yet the Plug Power experience is a cautionary tale about the importance of economic substance over hype. And so there are key lessons for the global sector. The first is prioritize sectors where hydrogen is technically superior and economically justified. Industry, transport, grid backup, and new materials for fertilizer, chemicals, and ammonia. The second is build regional clusters and integrated value chains, so hydrogen is consumed where it's produced, reducing transport losses and maximizing impact. The third is leverage public funding for pilot projects, but demand real-world returns and clear offtake to ensure long-term sustainability. The fourth point is to watch share price corrections and market volatility as signals of necessary discipline, not sector weakness. And lastly, real innovation is happening, but the quote-unquote next big thing in hydrogen is not always the biggest, most visible project. It's the one that delivers reliable performance, cost reductions, and proven applications. All right, that's it for me, everyone. If you have a second, I would really appreciate it if you could leave a good review on whatever platform it is that you listen to. Apple Podcasts, Spotify, Google, YouTube, whatever it is. That would be a tremendous help to the show. And as always, if you ever have any feedback, you're welcome to email me directly at info@thehydrogenpodcast.com. So until next time, keep your eyes up and honor one another.